What is up everybody, Gifford here and welcome to another video. Today we're talking about Celsius stock, which is one of my bigger holdings in my stock portfolio. They just had their recent earnings report, so let's have a look and see what we need to do next. So the agenda for this video is we're going to look at the Q4 2024 earnings. After that we're going to look at the stock chart. Then after that we'll look at the DCF model of what investors think it should be or its intrinsic value. Then we'll look at my trades that I am doing in it, and then at the end we'll have a look to see if I am buying more shares. So getting straight into it, this is the investor report we're going to be doing. So it's got Q4 and the full year for 2024 financial results. You can see there that I've highlighted the revenue is $1.36 billion. The gross margin is very high at 50.2%, and we've got net income of $145 million. And at the bottom right we can see it's got $2.7 billion in retail sales just in the US alone, which is very good for an energy drink. Having a look at the revenue, we can see that it has slightly decreased from the previous year at $332 million. And looking at the net income, we can see that it has declined at negative $18.90 compared to $50 last year. So we can see from the revenues here that Celsius did have a big growth there, but then it's kind of stagnated. That is why the share price, when we have a look at the stock charts, did come down a bit. And also that's what alerted me to the stock, because it was coming down heavily, and I don't think the metrics, are that bad. The growth does look like it has slowed down, but I don't think the stock should be negative 70% type thing. And here is just an easier format to have a look at. So you can see Q4 2023 and that it was up by 95%, 37%, 23%. But this is where we're having the issues here at negative 31%, and now it's at minus 4% year on year. So I think there's a bit of recovery there. We do know that their biggest customer, Pepsi, are not ordering as much anymore, which was causing this great big ramp up here. However, Celsius is doing pretty well by going into new markets, namely in the international. So we can see that the international here has started to go up over the quarters, so that's really good. That means that people do like this drink and are buying it from different countries, obviously. And I think the most important thing is it does fill that gap where Pepsi has not been ordering, although we know that the biggest market is in the US. So as long as we can continue this growth here and people do like the drink, I myself buy the drink and here from New Zealand. I think it tastes great, and that's why I'm an investor in this product. And on page 13, it's really good to see that Celsius sort of just wants to continue in their growth path. They have their roadmap. They're letting us know here that they've got other flavors, other categories they want to get into, and they're going to keep innovating with their design. So I think it's pretty exciting, learning about a new segment that I'm investing in, which is energy drinks. Namely, I've been having a look at EVs, manufacturing, semiconductor stuff like that. So it's nice to learn a new type of stock and a new type of product. And obviously the biggest news in this quarter was that Celsius is acquiring another drinks company, albeit a smaller one, and it's called Alani Nu. And the main reason they decided to buy that Alani Nu is that they reckon that it's going to be combined, having Celsius and Alani of, sales of $2 billion, and then also that having those two brands will mean they have a 16% market share. So again, growing their portfolio, growing their market share. And the good thing is that if they didn't buy this here, Alani probably would have taken some market share of Celsius. So by being the bigger company and buying this, now they get a bigger portfolio, and hopefully they can, spread the stuff that they've been doing right into this new company here. But this is not for another sort of 3 or 4 months, I think. So we're not going to see the numbers straight away in the next financial quarter. And here's just a slide comparing Celsius to what Alani do. But basically they're just showing you that they've got different target audiences. They're pitching to different people. So therefore it means that they're capturing more market share across the brand. And over in page 23, they're just showing you the plan or the expected increased sales and how much money they want to be generating from this. So all pretty good stuff, and just showing you that this is going to be namely in the second half of the year in 2025 from my scribbles there. So going over to alpha spread, which I like to look at the DCF model, we can see here the intrinsic value that they have for Celsius. So the current price is $27.39 US, and they reckon it's undervalued at the moment by only 3%. So their intrinsic price is $28.24. That's lower than my average. My average is around about $31, although I do options in it to generate it, so my average might be able to come down, but it means that I'm kind of in around about ballpark figure, because the stock price, you know, the highest it get up to was about $100, and then it started falling very quickly over the last, you know, not just a few months, but the last 6 months. So looking at the 1 year chart, if I click that, see the price was pretty close to $100, and it has been going down, you know, so that's only the beginning of this year where it's dropped pretty much 70%. So pretty rough ride for the stock here, but this is why I got into them, because I saw this massive decline and I was hoping to find an opportunity to buy into this. So it looks like it's kind of found itself a bottom, although it did get pretty low here at the $22 mark. It might go back there again. In my previous video, I did have a look, the grim reality that if it did continue to fall, it could go all the way down to $15. So hopefully this still keeps up. They put out positive news and the company does do well, you know, makes more revenue, makes more earnings. Hopefully Pepsi starts ordering again, which then generates that revenue, and we can sort of stay above this here, or preferably it jumps back up, you know, doubling its prices. But yeah, we just got to see what happens in the future. So what trades am I doing in it? Well, I actually played earnings. So just before earnings, I brought some calls which had a strike price of $32.50, and I made about $2,000 off that. So I picked it pretty well, because the stock price went down and it went back up again after the earnings because of that positive acquisition news. And the good thing about this is it paid off my MPW losses, because I did have some losses from there, because MPW has not been performing great, and that is also why I'm looking to exit those positions. But yeah, I'll talk about that in a separate video. So what I gathered from the Q4 2024 earnings is that the company looks to be doing well in the future. They're going to get some new acquisitions. They're trying their best to generate those revenues, but we can see that the growth has slowed down significantly. It's not like back in 2020, 2021, 22, where they're just growing, you know, 100% or between 50 to 80% growth. It's not happening anymore. And this is just purely from the research that I'm doing, and the analysis is that growth has significantly slowed down for me, that I am going to halve my position in Celsius stock. So here is a record of it. So on the 19th of February, I did sell a call option for $31 of Celsius, and I got paid for that there. So that was quite good money. But as you know now, the stock price did drop lower than 31, so I did end up selling those shares. And the good thing is, while the stock did drop down, I think below $30, I did sell 100 of my shares at that confirmed price of $31. So I made some good money there as well. So am I buying more Celsius stock? Well, the answer is yes and no. That's because long term, I do hold 200 shares, but it's via options. So we can see here, so with this one here, I do hold call options. So if the stock price is above $32.50 in September, you know, this year, that I will end up getting money for this, just like if I was holding shares in it. Short term, however, I am wheeling one contract, which is 100 shares. And if we see here, whereabouts is my position? Yes, right here. You can't see the quantity, but that's it right there. You can see that the stock price, my cost basis was $31.77, but then the current share price right now is $25.46. So answering the question, why haven't I not gone all in? And that's because the growth has slowed down. Obviously, I've mentioned before, the Pepsi demand has also slowed down, so that has been a big factor in it. When they do order some more, or they increase their orders, we're going to see that in the stock price, because it's going to show more revenue and it's going to drive the stock price way higher. But as of now, they're not ordering a lot. And the one thing I like about Celsius stock is that I have been making money also on the downside by buying puts. So we can see here that I do actually have a put option in case the share price does go less than $22.50. This is really just a protective put, which means that if the share price absolutely tanks to $15, which I think it might do, I have some protection, because I will be able to sell my 100 shares if I have them, or, you know, the money that I paid for these ones here, I'll start actually making money if it's less than here. And this here has a decent amount of time in it, so this is not expiring till September 19th. Sort of, I made it so these two here lined up. So now that I've told you I've halved my position in Celsius stock, which effectively I used to have 15,000 New Zealand dollars in it, but now it's only around about $7,000. So it's not, you know, my conviction is still there, but just looking at what I've seen, how the financials are, obviously that I've got to account for that, and the growth is, you know, it's missing a little bit, right? I don't expect the share price to double because the growth is not there to drive that. When will I buy? So I'll buy when the simple moving averages show it like this. So that's the share price, and then we have a simple moving average there, a second one there, and a third one there, a longer dated one, and you can see that is the order I wanted. However, this is the 15-minute chart. What I want to see is these same charts here, same formation, and we click it over to the 1-day chart, because then this will tell me hang on, let me just set this up a little bit better. This will tell me that, you know, there's a reversal in the trend, and that's really what I'm waiting for. The fact that, as you saw before, I want to see the green go up higher than the red, and I want to see that in that exact order. So we can see in the day, it's looking ugly. See, look at this. This is a reverse of what I want. I want the blue up here, the green in the next one, the blue there, and then the red underneath, you know, being at the very bottom of that. This is just an ugly trend, and I don't want to own the stock when it's kind of this way here. That's why I really like, where is it? There's the 100 there. Look at that. Oh man, that's so bad. This is why I want to only do options in it and hold the 100 shares just to wheel, because I need this to revert. And until that happens, I want to minimize my risk. And this can continue, and this could continue all the way down to $15, and I'm just going to get wrecked and lose my money. So just showing the 1 hour chart, we can see that here it is finding some sort of, you know, stable points here. But just looking from these charts here, you know, if we're going to do some technical analysis, we do make some decisions off those, and yeah, clearly they're telling us that it needs to reverse the trend. So ideally, if we can see this trend here in the 1-day chart, then that's going to give us an indication that it is sort of a turnaround play from there. But as of right now, it's a big no-go, and I'm pretty happy that I've reduced my exposure by 50% of my shares, as well as holding some stock options. So in summary, the reason why I've halved my position is because of the slowdown in growth, which clearly I've showed you in this video. I use options to capture the upside and the downside, so I do make money on the up and down if I get it correct. I don't always get it correct. I'm not a 100% win rate here. I'm just an average investor from New Zealand, and I'm not even that good. Showing everyone that anybody can do it, but I am making some money here, so at least it's not just a losing channel, right? That's a good thing. Anyway, if you want to ask me any questions and I know the answer, I'll be sure to let you know, so pop them down below. Feel free to use my referral codes if you want to start investing from New Zealand. If you want to hear from me every other day, feel free to head over to Instagram. You can also message me there if you have any questions, but I share, you know, in my posts, I show what I'm doing, what my trades are, and some just stock market general news. Don't forget to hit like and subscribe, as it really helps me out, so thank you very much for that. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. And if you want to click this end video here, it's about my next NVIDIA gamble. It's a decent amount because, you know, I'm doing an NVIDIA option, which is about $20,000 New Zealand. So it's the biggest option that I have ever done. So feel free to watch that video. It's coming up. But otherwise, thank you for watching, and I'll see you in the next one. Goodbye.